Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, we got the employment situation on Thursday last week before the 4th of July holiday. And what I always like to see Monday is the Labor Market Conditions Index, which the Federal Reserve developed to look at all the data points around the jobs information. Because with the release last week, there was concerns about wage growth, participation rate actually going down. Reason for the unemployment rate heading downward was that people have actually left the workforce. So all of these things coming together, what does it do in terms of numbers? And what we've talked about before, actually we were having, as we moved through 2014, we hit a high of 7.2 on the Labor Market Conditions Index. As we moved into this year, we went negative 1.3%. Then previous month was reported 1.3% positive. It actually was revised downwards to 0.9%, and it's 0.8% released here today. So when we think about that and the way that the Fed looking at inflation, and without wage inflation, but on the other side with the employment situation being in this kind of area, it still suggests to me that the Fed is on hold for a considerable period of time. When we look at it from the standpoint of our national maps, once again provided to us from Federal Reserve Bank of Philadelphia, the 3-month change, looking backwards 3 months, was at 0.7%, compared to April 0.6%, March 0.7%. And that compares to all of last year at 0.9%, and 2012 and 2013 at 0.7%. This would also indicate that on an overall basis that economic growth in the U.S. is going to be somewhat like it has been over the past couple of years. But what's growing bothersome is that where before the entire country was mostly light green to dark green with some blues, is that now we have reds, purples, indicating negative growth in here, and grays unchanged. And that is concerning because when we look out over the next 6 months, it continues with these kind of negative growths in certain states. And what it does on an overall basis is that in May, 1.6% growth, April 1.5, March 1.3, and that compares to 2014 on average at 1.74, and compares to 2012 and 2013 at 1.4%. So when we look at these really very low to moderate type growth rates, that overall it would suggest that the Fed will be on hold based upon overall economic growth. But it's interesting, when we look at the midsection being light green to being pink, this was the area that led us out of the recession. And we go back to maps that came out of the recession, is that essentially West Coast, Southeast were all red at that time. And now the situation has just flipped itself once again because of energy and because of commodities being at the levels that they're at. This is Jay Brew. Have a great week.